Hello and welcome again. Today, want to check those guys who've made a wise decision and wants to set up some investment for themselves. And today, we're going to look into uh, the easiest instruments where you can put your money, uh, expect returns constantly as you grow. So, as a beginner investor, today I have assembled the top 5 ways or investment options for you to put your cash and wait for it to grow. Stick with us till the end. Like and share this video to your friends and your colleagues to help them get enlightened as well. I'll be your host, GM. Without much ado, let's sink into the video. The first option and the most popular one is the money market fund, commonly referred to as MMF. This instrument, uh, it's one of the most preferred instruments since it has the lowest risk. Money market funds, to be general, this is an investment or instrument that which is commonly regulated by the capital markets authorities of Kenya and invests whatever you put there, where you are guaranteed to earn a compound interest, which is normally compounded daily. So MMF is gonna help you grow your your capital with time while you're receiving a compounded interest, compounded usually on a daily basis. Some of the advantages of using a money market fund include, but not limited to, its low risk nature compared to some other options. It's easy to start as low as Kenya shillings 100 can be used to invest in this particular instrument. It gives a very attractive return depending on the prevailing circumstances, and the return could range somewhere between 9 and 11% annually, which is again compounded daily. It's something that is widely available these days, where some fund managers they have introduced some applications. Some of the popular options include the CIC, NCBA, Britam, among other money market fund managers. So think about this as one of the options when you are considering to start an investment plan, or you're considering to set aside some amount of money for your future. Option number two uh, is SACCOs. SACCOs are very popular in our country, Kenya, where we have examples of Stima Sacco, Mwalimu Sacco, uh, Wakenya Pamoja Sacco societies, the Arambe Sacco, etc., etc. So SACCOs are good. Some are good for employed and businessmen uh, who have a steady income, where you can save monthly, and at the end of the year you're going to earn a dividend. So if you intend to begin an investment, you can decide to use SACCOs as one of the ways you can invest. How? Put your money in a SACCO, and at the end of the year you're going to receive a dividend. So basically, SACCOs and shares don't differ very much because they pay returns in terms of shares. The only difference SACCOs have and shares is that in shares you get what we call capital gains compared to SACCOs, where again in shares you might also lose your capital in terms of some percentage of your capital if whatever you invested, uh, the firm or the listed company is not performing very well. Another advantage of using SACCOs, it's easy to access loans. So if you're a business person, you are a salary person and you might want to get a loan on a later date, then you should consider investing your money in SACCOs. I've mentioned examples like Stima Sacco, Azina, Unitas, among other uh, SACCOs. Treasury bills and bonds are also another option for a beginner who wants to invest in Kenya. These ones always gives a fixed interest of up to 14%, and they're government backed. These are sponsored by government. Like, you're lending money to the government, you are loaning the government. So if you have a treasury bill, that means the government owes you money, and it's a very good thing. It's a very interesting thing because you're going to uh, you're sure of the returns. They also equally have a very very low risk. Same, just like the MMF, as we mentioned earlier on, and the return is fixed. It's simple interest. That's now another great difference between it and the MMF. They do their returns based on simple interest. So if you sign 14% and you invested 50,000, be sure you're going to receive your 14% of 50,000 at the end of the month of the year. The exact amount uh, calculated in simple interest basis as opposed to uh, MMF. You might consider doing a fixed deposit account where you're going to lock your money for a specific period of time, and upon maturity you're going to receive your money plus interest. This is widely available because we have a wide spread of banks locally. So this one, the return is not so good, but you are sure of getting a return of somewhere between 7 and 10%, which is not bad for a beginner. So you can consider to lock your amount if you go with this particular uh, avenue. The final avenue is one that has been practiced for a very long period of time. That's chamas. That's, in other words, group investments. So this one, you're going to put your funds together. You and your members, the trusted members, you sit down, you put your resources together, you buy a land, you buy shares, you run a business, you put your money somewhere, like you're doing monthly contributions. So you pull up resources in simple terms to generate income. So this is one way of growing your investment. But again, it might be one easy way of losing your money if you're not careful on which hammer you are participating in. Uh, another good thing with this, you're sure of returns if maybe you took your money and invested in a business. But again, it's very very risky. Also, you can be in a chama, assume you are investing, but the chama is just collecting money and there is nothing meaningful your money is doing. That's same as like you're saving your money under the uh, mattress. So be careful when you're picking this as your option of investment. What are key takeaways for today? So, from today's discussion, the key takeaways are small starts but consistent. Start small, but make sure you're consistent. Say, set your goal. That's what we mean. You start small while you are aiming your goal. So, understand also where your money is going. Don't just put your money where you don't see it. Don't just give your money out and you don't understand where it's going. Also, diversify the sources of investment as you grow. As you grow, try to diversify where you're investing. So, if you have shares, you have an MMF. Try also to put some amount of money in treasury bills. Try also to put some amount of cash in a in a fixed deposits. So diversity will always uh, protect you or insure you against loss in case something happens. So this is like spreading the risk. Thanks for staying with us. Welcome again. Be free to comment which of the above discussed financial investment options that was your favorite, and share this video to your friends. Also, coming up some good investment tips, how you invest, among other things. Stay tuned for more good things to come.